Here we are going to discuss about the input tax credit. The input tax credit is the core concept of GST as it removes the cascading effect of taxes. A registered person is entitled to avail of the credit of GST paid on input goods or services and capital goods, subject to certain exceptions and fulfillment of certain conditions. The input tax credit can be utilized by the registered person for payment of output tax on goods or services supplied by him. Input tax credit means the credit of taxes paid on inputs, capital goods, and input services. The input tax in relation to a registered person means the central tax, CGST, state tax, SGST, integrated tax, IGST, union territory tax, UTGST, and the compensation cess charged on any supply of goods or services. It also includes the IGST paid on import of goods and the tax payable under the reverse charge mechanism but excludes tax paid under composition levy. Conditions to claim input tax credit. A registered person is entitled to take the credit of input tax paid on any goods or services purchased by him and which are used or intended to be used in the course or furtherance of businesses. The credit of taxes paid shall be available if the following conditions are satisfied. The first one is the recipient can claim the input tax credit only if he is in possession of a valid tax paid document issued by a registered supplier. The input tax credit is allowed when the recipient or any other person, as directed by the recipient, that is, agent or job worker, etc., receives such goods or services. If advance payment has been made by him for goods or services, then input tax credit shall not be allowed to him until goods or services are received. Conditions to claim ITC. The input tax credit is allowed provided the taxes charged in respect of such supply are deposited by the supplier to the credit of the government. The filing of a GST return by a supplier is mandatory for the recipient to claim the credit of input tax paid on goods or services supplied to him. The next is blocking of ITC. In general, a registered person is entitled to avail of the credit of taxes paid by him on inward supplies received by him. However, there are certain goods and services which are not eligible for the input tax credit. That is, items of personal consumption, membership of club, health and fitness services, etc. The next one is reversal of ITC in certain situations. The recipient shall be liable to reverse the input tax credit already availed by him if he does not make the payment to the supplier towards the value of goods or services along with tax payable thereon with a period of 180 days. On reversal of input tax credit, the recipient shall also be liable to pay interest on the amount of tax so reversed. There are certain circumstances in which a registered person is liable to reverse the ITC claimed by him. A supplier opts for composition scheme, capital goods are sold, a registration is cancelled, etc. In these circumstances, the supplier is required to reverse the credit within the specified time period in the manner prescribed. If he fails to reverse such credit, he shall be liable for payment of interest and penalty in addition to the amount of ITC to be reversed. A registered person cannot avail the credit of the taxes paid in respect of goods or services which are not wholly or exclusively used for making taxable output supplies. If an entity has some common inputs for making both taxable and exempt supplies, the tax credit shall be allowed only for that input that has been used for making taxable support. In other words, if output supplies are both taxable and exempt, the supplier can only take proportionate credit of the common inputs in input tax credit in goods and service tax. But it is very useful for the business peoples to pay their tax very confidently because of this input tax credit.